Welcome back. This is a Corporate Radar special, and my guest is the Managing Director and CEO of IDFC First Bank, Mr. V. Vaidyanathan. So, Vaidyanathan, thank you very much for your time. Well, the urgency to speak with you was just to get, what is the latest on the Haryana fraud case and how you are going to account for that, 600 odd crore that you have paid the government.
The answer is simple for that one. As you know, our bank doesn't postpone anything. So this amount will take it to the profit and loss of this quarter.
This quarter itself?
Yeah.
So it might be a loss this quarter?
Might not be. Actually, we expect to be profitable because what is happening is that fortunately, the microfinance incident is behind us and the credit costs are coming down. Margins are looking good. So the core profitability of the bank this quarter is quite strong. So we will be able to absorb it and still be profitable.
That's very good to hear. Now, just to complete this fraud issue, I don't want to dwell too much on it. The two other banks, AU Small Finance, along with your incident itself, and now Kotak Bank. And the chatter in banking circles is that a few more banks may also be in this issue. So it looks like a Haryana government problem. Won't you all approach the RBI or the Ministry of Finance or the government of Haryana to clean it up generally? It looks like a banking sector problem than an IDFC issue.
No, it is, of course, we hear these names and I don't know beyond these three names what other names are coming about. Basically, it is a situation where a set of employees of, in our case, our bank, I can talk about our bank, and obviously, it appears that people from the other side as well, as coming from the arrests that have been made by the Haryana government or the ACB. So they have probably colluded to clear a forged check or forge a check and get it cleared through our bank, and the money has gone to certain beneficiaries. That's the nub of it. Frankly, many agencies are involved in it, in investigating this.
No, the other banks are resisting paying, saying that the fraud is on the other side. You did not think of, why should I pay up first? Let us get the whole thing cleared since other banks are involved.
In the investor call that we did on Monday morning, this issue came to on Saturday. On Monday, we did an investor call. One of the questions asked by one of the investors was exactly this. Our answer was that, look, we want to be straightforward about this. It is pretty clear to us that our employees are involved. Now, we don't want to hide under investigation, this, that, etc. And we just wanted to pay. It keeps it clean. We now are together with the other government to go after perpetrators. Else we will be discussing with each other who has how much liability.
Fair enough.
And also it's a good customer trust. You have left money, you meaning the government, has left money with me trust. You have a issue happened our end, we pay for it. That's a model.
Fair enough, but I somehow have a feeling that this is going to be a banking sector issue. But we'll come. I mean, we will see it when it happens. We want more about IDFC Bank in this conversation. Will this war and the fact that gas is not available, etc., lead to some fall in your bank loan growth? Because your loan growth was stellar in the first 9 months.
So before we come to that, Lata, one thing for the benefit of viewers we must add about this incident itself. A bank has a maker, it has a checker, it has authorizer, it has SMS alerts that goes to customers, a statement of account goes to customer, balance certification, everything goes, everything works. This is a collusion. So one thing I want to point out is that now we have put some extra controls to address for collusion risks, which means that we are not allowing the branch to clear checks anymore beyond a particular limit. There was a limit, now we're cutting the limit, and we're bringing it to a central level. So I want to tell you that there's an extra level of control we brought here, so that collusion doesn't happen again. In our lifetime, they should not happen.
So that is the learning from the event, that you will not allow it to happen again.
Above vertical cutoff, it goes to a central level, so a scanned image process. And also specifically for government institutions, we will ensure that there's a proper email from the customer to accompany the check. I'm also happy to share, to the extent it is relevant to the viewers, that we have confirmed or we have written to all the government departments across the country, and we have got no other dispute from any other government. Just happy to hear.
Okay, that's very good to hear. What was the limit earlier, and what have you raised?
We don't share limits because then fraudsters also get to know the limits.
Okay, fine. So let me come to the war issue and the fact that there's no availability of gas, ceramic industry and plastics industry are all suffering some shortages. Do you see loan growth being impacted?
See, we have been growing, like you said, at 20% for the last 3 years.
Even more.
Even more. So that was, in the first 3 years we did not grow for other reasons because we had liability side issues, but now growing at 20. Our own sense is that we should watch this very carefully. We do not want to program the bank to say we will necessarily grow at 20.
Okay.
We will have to watch the market. It's like how in a cricket pitch, depending on the condition of the wicket and how the balls are coming at us. But chances are, at this point of time, there is no material damage to the ecosystem or economy. At this point of time, we are still growing it in that zone like the 1920. But we'll watch by time Q3, Q4. If the conditions change, we'll play differently.
Yeah, your SMA 0+1 and your NPAs have all been falling. The last quarter, the 9-month numbers were very good. Do you think this can disturb asset quality?
In this quarter, certainly no. I told you that I'm actually expecting a good quarter. And frankly, as things are laid out, we feel next quarter's our credit cost will be even lesser. Oh. We are traditionally used to having about 2% credit cost on a yield of 13.5% or a NIM of, let me call it 5.7%. At least next year, we're expecting credit cost to come down because microfinance has issues behind us.
Okay. Oh, microfinance. The government has announced a guarantee scheme. Won't that help you? I mean, in any way?
We are lenders to microfinance industry.
Yeah, NBFC MFIs.
Anyway. So, by the way, it's a welcome thing because it gives more confidence for the entire industry.
But it doesn't change your numbers.
It doesn't change the numbers materially because we are anyway lenders to that segment. But okay. Good to know that the sector will get that much more comfort from the whole ecosystem gives comfort to us as well.
One more immediate question before I come to the medium term. I've been looking at the deposit rates. I mean, everybody is offering 7.5, large banks like SBI. Will that mean that NIMs will have one more quarter of pressure?
Not in this quarter, because in this quarter, we have, despite this crisis, really good news, Lata, is that our deposits are intact. Imagine 8 million customers staying steady with the deposit. That's good. So coming back to your question. So
no, I mean in cost of funds.
I'm coming to that. So therefore, since the deposits are intact, we have not raised money at some exorbitant price in the market, nothing like 8% and all. We don't even go close to those numbers. I know some institutions have raised that money. We don't raise those monies. We expect this quarter's margin to, of course, be in our zone of guidance, whatever we said at that point of time, 5.8, 5.85 kind of rates. But next year, it would be safe to assume that like 5.7-ish kind of rate is what we should expect as far as our eyes can see today.
Okay. All right. Those were the immediate questions. My more medium-term question is that, I appreciate the fact that it was a Capital First in NBFC which took over another large asset book without retail liabilities. Yeah. But, the point is you'll have been in that investment mode, and that is why your cost to income is, 70% plus. At what point will this investment phase end and you will start, giving investors return on investment?
Okay, short answer is that next year itself. So by FY27, you should expect, and you anyway interview me every quarter, and you grill me hard. So you should expect that Q1 to Q1 you should see material improvement. Q2 to Q2 you will see improvement, and let me say this year is going to be 27 will be a breakthrough year, is what we expect.
What about ROA itself? I mean, the benchmark of a good bank of a strong bank is ROA of 1% and above. When do you get there? So
you should understand the breakup for that. So today our return on assets, we have two sides, right? We have a lending side and a deposit side. Lending side, our ROA is very good. In fact, next year we expect our lending side return on assets to be like 1.5% or so. Lending side, because obviously we're borrowing money at 6%, lending at 13, our credit cost is 2%. It's that's a spread of 7%. Credit cost of 2%. So net of spread, you're making a lot of money. So lending makes a lot of money for the bank, net of credit cost. Okay, but the bank is investing it in deposits and branches and ATMs. Lata, let me point out to you, this bank, because for the reason we discussed, did not have any PSL franchise.
Yes.
40% has to be given to priority sector. We had no priority sector franchise.
No, so I agree. Your early years were tough.
So in the last 7 years, we had to build
deposits and priority
40% priority sector, deposits, CASA was 10%, now it is 50%. So all this took investments. So I believe that from this year onwards, i.e. in 27 onwards, we will be here, you are on the channel, I am on the channel. You will see that 27 will be a breakout year.
So ROA at 1 by when? For the whole bank. I mean, I know in lending side you already are.
In lending, we're making money. Deposit, we are investing. But on an overall sense, we should be by fourth quarter of next year, we should be in kissing distance.
Okay,
So,
that's a very big promise. We will hold you to that.
Yeah, we should be. You should hold us. We should be in kissing distance. We're getting there. And imagine, Lata, we should not forget, it came from 0.
Yes.
So when people are disappointed at 0.5, I agree we're 0.5 today. It's not great. But you should know it's coming from 0, right? So from a 0 to a 0.5 to 1, it's a direction. And I think we are getting there. I do believe, except for this one incident that has happened in our lives, I think it's the first bad incident that has happened in the last 7 years of our microfinance also happened, but that was a industry.
That was an industry issue.
It was an industry thing. But in our lifetime, under this 7 years, it's probably the first one. I'm not happy about it. We should go seriously after it. But numbers next year, you should expect the bank to do well.
Okay, that's very good news. Thank you very much, Mr. Vaidyanathan, for joining us, and let us hope that you will be within handshake distance of that 1% ROE.
Thank you. But I was to take this opportunity, Lata, since you've given me this opportunity to even share with everyone that the incident, I am assuming that when our Q4 results come, Q1 results come, Q2 results come, will be a forgotten thing. But the franchise is strong, the customer proposition is great, the brand is very good, experience is good. So there is something fundamentally good. We have 40 million customers. It's not small, right, across. So we have a good franchise. People should have confidence and just watch the next year. Things will get better.
All the very best. Thank you for joining us.
Thank you, Lata.
That's it on this edition of Corporate Radar. Thanks for watching. After a break, Chartbusters.